Welcome in to the Friday, November 25 Market Plus segment. We're going to continue our discussion. We call it Turkey Talk with, no, I'm not calling these people turkeys. Chris Robinson, Ernie Goss, good to have you both, guys.
I have been called a turkey, though.
I know, but I didn't want to bring that up with Chris. He thinks things are going well with you. Ernie?
Gloom and doom, that's what, two economists together. Now, Chris would never claim to be, he's way above an economist. But
well, and Peter, our producer, was going to tell me in my ear if you said anything about on the other hand, and I was going to say you're out of hands, Ernie. Do you enjoy, what's your favorite economist joke?
Gosh, you've really put me on the spot there. God.
Do people make fun of economists?
Yes.
Are you kidding me?
Sorry.
We're second only to lawyers.
It's a dismal science.
I was with the Congressional Budget Office for a while, and you couldn't swing your arms around without hitting an economist or a lawyer, and that's what you should have done. Swing around and hit both of them. Hit them both. They did it right.
Well, the economists and the lawyers and the politicians are looking at the Far East and China. We just had a pretty monumental meeting between the two presidents last week. That followed into this week where the vice president was talking. What does China-American relations mean to an economy if it's good relations?
It's absolutely essential, and that's in terms of what's going on particularly in terms of energy. We talked in the earlier half about energy, but in 2014, President Biden negotiated with China an agreement to cut coal energy production, electricity from coal. Well, since then, they have increased coal production by 356,000 megawatts. 356,000. At the same time, we've increased it 156 megawatts, not 156,000. Now, in the latest negotiations you just spoke of, we negotiated that we're going to kick in $1 billion into a fund to support cutting CO2 emissions in the developing world, and they're part of the developing world. I mean, China is the second largest economy on the face of the earth, and now we're treating them as a special case that they can continue to, in other words, when you dirty your kitchen, when we're trying to clean up the living room, the smell from the kitchen comes here too, and there's no recognition that we need to negotiate, and the president has not done that with Xi Jinping and others as well. And
it gets to be tough lines, Chris, because you are trying to hold a country who's also a major destination of your commodity. Yeah. You have to be, I won't say tough love, but it's, you have to play fair, but they're not playing fair.
They take 80% of our soybeans. That's really what it comes down to. So, and they have a choice to possibly take more corn from us or not. They just cut a deal now. They're going to get corn out of South America that can be non-GMO. That's huge. That's taking away more demand from us. But you talk a couple things about negotiations and what's fair and what's not. So much of what's going on has been seemingly one-sided from a layman's point of view with those negotiations. I mean, just what happened with the Russian boycott. China was taking Russian gas and selling it to everybody else. It's like they're playing both sides of the table, and we're playing Marcus of Queensberry rules, and they're kind of doing whatever they want to do. My biggest fear with China, and I want to see if you agree with me, if they do decide to go into Taiwan, the first thing I would imagine we do is take Jimmy Carter's playbook and embargo them the same way we embargoed the wheat with Russia. I think that would be the biggest risk, and that's one thing as a risk manager, that's probably the worst thing that can happen to this country, because certainly to our producers, because if they forcibly took away that demand, not only would it be very painful, but then how do you come back from something like that?
And as when Jimmy Carter boycotted the Olympics with Russia, how much good did that do? It hurt a lot of athletes. I'm not sure it had any impact on making things better. But and if you want to watch in terms of what would be the spillovers, watch the 10-year Treasury. The yield on the 10-year Treasury, that would come down, down, down. All this safe haven buying would come in there. We haven't seen any safe haven buying in terms of gold. We haven't talked about gold prices. Normally, we would expect to see gold at above $2,000 an ounce. We have not. Why? I would argue cryptocurrency is one of the reasons, but also the Treasury bonds that we're seeing this moving into those bonds for safety's sake, and concerned about gold.
Chris, you mentioned risk and taking advantage of things. You mentioned during the main program about quick changes. How does one position themselves? I mean, the year-end, farmers are always positioning themselves for the next year, whether it's buying iron or land before, trying to avoid paying some tax. How do they position themselves with the crop that might be locked in a bin?
Oh, for the stuff that's in the bin, you need to have a floor because we're still in a relatively good position from where we were this summer. I think moving ahead, whatever's in the bin now, you measure it against the summer low, right? And this year was interesting because I think a lot of people did not expect that we'd make our high in June and our low in July. And then we had a really nice rally. We had a kind of a gift of a rally, again, as the world came out of the whole idea that, okay, we're done with COVID, demand's going to pick up, here we go again. So it's been a gift. I would say start with that. Do not let that revenue go without fighting or without having cash sale targets or some sort of hedge on those bushels. And also, too, we mentioned this a little bit before, if corn's trading at wherever it is, let's just say it's at 620, there's nothing wrong with having an offer with your elevator to sell it at 655 or 656 or some number, because it may happen in the middle of the night when you're sleeping, and then it may be gone by the time you come in. And that we've seen that multiple times, especially in the wheat market, where we had 50-cent moves, which disappeared within hours. So that's a key. It's a simple thing to do. It takes a little bit of discipline, but it is nice to be able to have to take advantage of those cash sales when they're there, especially when they're short-lived.
We don't always talk about cotton, but it could be a good cautionary tale for, I think, what you're describing.
Right, multi-year highs. We were at 130, and here we're went all the way down to 70, and a couple times we had 30, 40 cent rallies. We had 2 rallies. Those rallies were gifts. Anything north of $1. In fact, the last rally we got to 120, and then a month later we're at 70. And the market, there's arguments out there as to how much product we actually have, right? And we won't know but the truth facts till January, February, when the numbers are there. But there's some concern that, if our exports stay where they are, we could actually run out of cotton to sell. And who's the biggest buyer of cotton? China. They're also the biggest producer. Mm-hmm. So they really impact that market. Watching crude oil and cotton, those have been 2 extremely volatile markets. So cautionary tale, when a market gives you a gift, I can see if you don't want to sell it, but hedge it.
Ernie, what's my caution for the end of 2022 and the first 3 months of 23?
Paul, I'll say, our chief economic model is using regression, and what that means is looking backward and projecting that forward. We're in unprecedented times. Things just have not happened the way we expected them to, and I would expect that for Chris and economics. Very, very true. But going forward, we're talking about a little tougher times first, and a lot depends on the first part of 2023. A lot depends on the strike, the potential strike of the rail strike during the first 2 weeks of December. If that happens and we get more supply chain disruptions, we're going to see at the same time higher prices, higher interest rates. This is sort of a coming together of all those worst things. And the Fed is going to sit there on December the 14th. They're already slated to raise interest rates by 50 basis points. That'll raise the prime interest rate from 7 to 7.5%. I think if that happens, the strike is continuing on through the 14th, they may have to step back and say, well, maybe we better not do this right now. It's too troubling times. But right now, it's looking, and I think, in my judgment, again, a shallow recession in the first part of 2023, higher interest rates. The inflation numbers are already coming down. The producer price index, what we call a wholesale price index, has already come down. Look at what's happening in commodity prices globally. Mm-hmm. Much better, meaning lower in this case. And we're seeing that moving back, and the Fed is still raising rates. And you're like, what's wrong with this picture? They're saying we're going to have a soft landing. Well, usually that's a little hard landing. In other words, we've all been on those planes. Well, if they keep raising rates, I think it's going to be a tough, hard landing. So we'll know much after the first half of 2015 will tell us a lot what's going on.
Do you have a headline for 23?
Well, 2022 was the inflation trade, right? For 2 years, you had the financial community, they were gorging themselves on commodities. They couldn't have enough because it was inflation. Now that, if that big macro trade has gone away, you know, if you're not doing something to take advantage of it, I'm not going to say we're going to have deflation, but these are multi-year highs, right? Cattle's at 5.5-year highs. Corn and soybeans here, you know, $14 soybeans, $6 corn. You haven't even planted a seed yet, and you got $6 corn. Don't let it slip away, because 2 years ago, in 2019, it was very dismal. People were talking about potential farms, you know, people losing their farms, high suicide rate with farmers. So we've gone from the depths of despair to, you know, great opportunities. So
Right.
I'd say, please don't let the opportunities get away. Do something, have some sort of a plan, take care of yourself.
And I'd say headline, watch what's going on globally. I mean, it's going to be 2023 is going to be a year where we're watching what's going on with Xi Jinping, what's going on in the European market, and Great Britain as well. We haven't talked about Great Britain.
We'll
also.
quiz you about your outlooks for 23 next year.
Okay.
All right, sounds good. Ernie Goss, Creighton University, thank you so much.
Happy Thanksgiving.
Happy Thanksgiving to
Happy
you.
Thanksgiving.
Happy Thanksgiving to you as well,
Yeah.
Chris Robinson. That'll do it for this edition of Market Plus. Next week, we will look at the transportation issue, and Matt Bennett and Sue Martin will join us here to discuss the commodity markets. We'll see you next time.